Welcome traders to this educational video of Nifty Analysis, episode number 24. In the previous week, we have seen that Nifty has gone through a serious selling pressure on the back of coronavirus disease, and even US markets have been scooped by this particular bad news. What we can see in the weekly chart currently is a very big red candle, and it is not just a red candle, it has closed below this 50-week simple moving average, which is clearly saying that we are in a downtrend. And apart from this negative sign, if you see the size of this candle, it is extremely huge in comparison to all these red or green candles, which we can see since 2018. There is one big red candle over here in the October 2018 year, but apart from that, this is the biggest, and this is not a good news for the bulls. We also have a trend line breakdown in RSI, which is showing that the momentum is extremely strong on the downside, which is again not a good news. Although there is something which can save the bulls, and that particular thing is this trend line, which is existing since October 2018. We can see that this is the first two times and the third and the fourth time. So this particular trend line is holding on since October 2018, and it has been tested 4 times almost. Now the support level possibly for the next week could be around 11,050, 11,000 levels for the bulls in the weekly time frame. All right. Now let us analyze the daily time frame. Daily time frame we had seen in my previous video. I had told that 11,650 and 11,600 levels could be achieved on the downside, which we saw were clearly and easily achieved on 27th February. All right. And we had a very big hammer, and this hammer was made on the back of this particular support, this low, which was made on 3rd Feb. And suddenly the next day we had a gap down, which was not not expected. And after this gap down, relentlessly the market kept on selling. Even in the last half an hour, I saw the bears were continuously selling the markets, which is not a good sign. Apart from this bad news, what we can see is the RSI is oversold. All right, the RSI is oversold, and this has happened after August 2019. Now, is there anything good in this particular chart or not? Let us concentrate on that. What I can see is, as per this Fibonacci extension, we are at a support. First of all, 11,215 in round figure, 11,200 seems to be a support. In the weekly charts, we saw 11,050, 11,000 levels seems to be a very good support. So according to my analysis, 11,200 to 11,000 levels, this entire 200 points band, not a level, this entire 200 points band is a very strong support for the markets. Although we should not forget, my friends, that this particular selling is not a normal correction. It has come on the back of an extremely fearful coronavirus disease, and we have seen global markets selling off. In this sort of scenario, in this sort of things, I have also seen 2008 correction. When the fear is extremely at a high level, none of the supports work. We need to understand that. So first of all, people who have a habit of picking tops and bottoms, please be very, very careful in your approach. And even if you're tempted to do that, do it in extremely small position sizing. So at least if you face a loss or something, the losses are very much minimized. Do not forget, because due to this sell-off and especially this last Friday sell-off, I think the volatility would have spiked. Now coming back to the levels, according to me, if we manage to remain above 11,000 levels, anywhere between 11,200 to 11,000 levels, and if we bounce back, then we could test possibly 11,380 to even 11,540 and 11,600 levels. And this would just be a bounce back. Mind it, I'm not talking about a trend reversal as of now. I'm just talking of a bounce back, because RSI is oversold. We are near important supports, and this is just a probability. This is not that I'm saying that market is going to bounce back. Since we are oversold, it may or it may not bounce back, because if the fear of coronavirus continues and the negativity, the negative sentiment in the market continues, and if we close possibly say 100 points below the 11,000 supports. Let's say we close below 10,900 levels and we sustain below that for a day, then possibly we could also inch towards possibly 10,800 levels and even 10,700 and even 10,600 levels. So please be very, very careful in your approach towards trading in the next coming week and keep your position sizing extremely small. All right. Trade safely and trade wisely. Thank you.